Welcome to Fundamentals of Finance. I'm Dr. William Elliott, and this is FN 5521 Summer Session 2025. This is an introductory video just to give you a little bit of a heads up on how the course is going to run in terms of its format. I'll talk a little bit about the content, your obligations, my obligations, and a whole variety of things that you'll need to know to be successful in the class. So let's get started here. I am first going to get out of the way, and I'm going to switch over to my iPad here so that we can look at the Canvas site. Canvas is where a lot of the interactions are going to take place, and so let's begin there. This page is the home page on the class site. The video that you're watching right now is right here. So we'll skip down below that. And the course description is written right down here. Hopefully you'll be able to see this. I don't know what size screen you're using. One thing that I want to point out in particular, the prereqs are really important. So the accounting and the econ prereqs, if you have not had these, I strongly recommend that we have a conversation before you try to take this class. These prereqs are there for a reason, and in particular, this course builds off of that foundation. A lot of the language that we'll be using is what you'll learn in that accounting class as well as the two econ classes. So it's very important that you have that under your belt already and have a good sense of the language of business and finance in particular. In terms of my background, I am a graduate of the University of Arizona. I did my doctoral work there in Tucson, and my first job was at UW Oshkosh. I then moved to Oklahoma State University, spent 8 years at Oklahoma State, and then on to UT El Paso, spent another 7 years there. I moved to John Carroll back in 2014. And have been here since. In terms of my research interests, they are largely in corporate finance, which is really what this class is about. And so I look at things like, why do firms do stock splits? In fact, I use stock splits as an experiment, kind of a naturally occurring experiment as well. I also explore share prices and the level of those prices, which is a corollary of stock splits, right? Because a share price can change as a result of a stock split. I've also delved into executive compensation, mergers and acquisitions, as well as valuation and capital structure are other areas of interest. My articles have been published. I've been fortunate to be able to publish at the highest level in the profession. And so here are a few of the articles. You can just click on the links here if you're interested in any of that. I also, just a couple of years ago, we finished up a 6-year stint as co-editors, myself and two of my colleagues, co-editors of one of the premier finance journals in the field, the Journal of Financial Research. And so that's just a little bit about my professional background. In terms of how to get in touch with me, email and my cell phone are the best ways. So the email is welliott, 2 L's, 2 T's, at jcu.edu. The best number to get up with me, especially during the summer, is my cell phone. That's the 915 area code number there that you see on the page here. If we do happen to meet face-to-face, my office is on the second floor of the Bowler College in SB 227. That's within the Econ and Finance suite. In terms of the class itself, the class is an introductory class to the field of finance, and finance is a very large field. It's a very important part of the economy, or rather, I should say, it has become a very important part of the economy. It makes up somewhere in the neighborhood of in the 13, 15, 17% of GDP is produced by people that are in the field of finance. And so we're talking about banks, we're talking about insurance companies, investment companies, investment banks, things of that nature. But there's even more in the finance function. Every single company, whether you work at Sherwin-Williams, Progressive, Goodyear, any of the other nearly 50 plus companies that are publicly traded within an hour of downtown Cleveland, there is a finance function. And the folks in that finance department or division, whatever they call themselves, are their job is to figure out what are the new projects that we're going to take on as a company. Will they increase the value of the company? How are we going to fund those projects? Are we going to use equity? Are we going to use debt? Are we going to use a combination of the two? And they also help to produce the financial statements. A lot of that is done by CPAs and accountants in general, but finance people have input to that as well. So there's just a wide array of jobs out there. One of the least thought about jobs is investor relations. So every company has a group that is focused on interacting between the company and the investors. So it's kind of a fun job, even if you're not particularly analytically oriented. If you're more of a person-to-person communicator, that's a great spot to be, because you learn about the company, you learn about the investors' needs, you get to see kind of the big picture, if you will. So investments and finance in general is a great field. The reason that finance has taken up such a big chunk of GDP is basically twofold. One is that we're able to reduce transaction costs. So even going back several hundred years, it was very expensive to transact in the finance world. Today, commissions are zero. Well, to us, they're zero. There's actually still a very de minimis cost, but it used to be that a commission to buy or sell a stock was upwards of $100, even as recently as the last century. And today, we can get online with E-Trade or with Robinhood or any of the other online deep discount brokerage houses, and we pay nothing, at least in terms of commission. There are still some embedded costs in there, but so finance has done a great thing by lowering transaction costs in every area that we operate. Another thing that finance does that makes it so valuable is it allows us to put our money to work at its highest and best use. So if you want to take a lot of risk, there are places that you can invest your money in. If you don't want to take a lot of risk, there are good places to invest your money. So finance is a really interesting and constantly changing field. I hope that you enjoy it as much as I do. I've found it to be a very rewarding area in which to do research and teach and learn about how the field is constantly changing. Now, in terms of this course itself, the format of the course is asynchronous, meaning that we don't have a set day or time to meet. That doesn't mean that we're not going to meet. In fact, that actually we will be meeting for sure. I have a number of what I call touch points that require that we get together. And typically that's going to be on Zoom, unless you'd like to do face-to-face. I'm very close to campus, so I'm happy to meet face-to-face if that's helpful to you. But we can work in Zoom as well. I have a whiteboard that I can use on Zoom, so we can even work through equations, things of that nature. I have a calculator on the iPad here as well that will allow us to be pretty robust in terms of the discussion and description of how to solve a particular problem. Now, the other thing that I want to say about the class, and this is particular to the fact that this is a summer session, and our summer sessions at John Carroll have been compressed by quite a bit. So we're down to 6 weeks here, and that doesn't give you a lot of time. Past experience in teaching an asynchronous class, I've tried leaving basically it up to the student in terms of pace on the class. I found that doesn't work very well. So I've actually put quite a bit of structure on the class in terms of deadlines and when you have to read a particular set of material and work through the homework and things of that nature, when you need to take the midterm, when you need to take the final. I'm going to talk more about that in just a minute. I've actually put together a schedule for you. 6 weeks is going to go by in the blink of an eye. Think of it as about 1/3 of a regular semester. It's a little bit longer, right? 5 weeks would be about 1/3 of a regular semester. So it's almost like taking 3 classes during a regular semester. That also brings me to want to talk a little bit about your other obligations. I'm assuming that many of you work, and maybe you work full time. If you're working full time and taking this class, that is a heavy workload right there alone. I hope that you're not taking a second class and working full time. I don't think that you will necessarily be successful at that. You're welcome to try it. You can always drop the class, but this class does require a fair amount of work, and the material is not always particularly intuitive. There may be some classes where you've seen things like this before. This class, finance, is not always something that you read it and you just go, oh yeah, that makes perfect sense. Well, sometimes you have to think about it for a while. So if you'd like to discuss that, if you've got multiple other classes you're taking and you're not sure whether this will work, I know that you want to try to get through the program in a timely fashion. We do offer this class every single semester, so not only summer session, but also in the fall and the spring. That's the nice part about having the async, is that it's easy to offer multiple times a year. But anyway, I'll just put that out there. If you want to talk about it, if you think that you're biting off a little bit more than you can chew, I'm happy to have that discussion. Feel free to shoot me an email. We can chat on the phone or even set up a Zoom session. Now, let's see. In terms of other things here, that's pretty much it on the format. I'll get back to that schedule in just a minute when we get to the syllabus. This is just kind of boilerplate right down here. So that's it for the home page. Now, I'm going to click over here to the syllabus, and we'll walk through that in a bit more detail. So let's see, that's got the same information that we just looked at. Office hours, I'm always open to chatting with you. I have a fairly flexible schedule this summer, so it could be evenings, it could be weekends, certainly regular business hours as well. So feel free, reach out. If you have any questions, I'm happy to help. That's why I'm here. So take advantage of that. The learning goals, I'll leave that for you to read through yourself. As far as the required text, this is an online text. It's an ebook. McGraw-Hill is the publisher. It's a very well done book. Ross Westerfield and Jordan, in particular, Brad Jordan, I know he's written, or he's a co-author on a number of other books I've used. I think it's Brad who really brings the readability to the book. So he's done a great job teaming up with Ross and Westerfield here. It is the 2024 release. They have a newer release that is actually going live July 1, but the class starts on the 30th. And so we're going to be sticking with the 2024 release. There is a short video right here that you can click on this link. And if you've never used a McGraw-Hill product and you haven't used Connect, which is their online interface, that video will help. So I recommend that you take a look at that video. In terms of other items that you'll need, well, a calculator is really helpful. Let's see, where did I put my calculator here? I recommend that you have an Texas Instruments BA2 Plus. This particular one is a all black design, but it comes in different color formats. The key thing is that there are some keys here that are related to time value of money. I actually have a emulator here on my iPad, but it's the keys in this third row, the N, the I/Y, the PV, the PMT, and the FV keys. Those are going to be the keys that are most helpful to you when we look at time value of money. So we're going to be moving money around in time. But you can think of it as, well, let's say I invest $1,000 today at 5% compounded monthly. How much is that worth in 5 years? Well, these 5 keys will allow you to calculate that very easily. Or maybe you have a potential retirement product that you're looking at, and it pays $100 a month for the next 10 years, and you're trying to figure out, what is that worth? What would I be willing to pay for that thing today? Again, you can use those 5 keys. There are other keys that pertain here, but it's those 5 in particular that are relatively unique to these financial calculators. The TI makes other types of financial calculators, and other producers make similar items. This BA2 Plus is kind of the standby, though, so I'd recommend that if you don't have one, get it. Just a quick anecdote. Many years ago, when I was in your place, I was actually a student taking courses in finance. I was out looking for a new car at the time, and happened to bring my calculator, had it in my pocket, and at the dealership they were going, well, let me figure out what the payment's going to be. And I typed in some quick numbers, and I said, yeah, it's going to be X dollars. You're right. How'd you know that? It kind of gives you a little bit of control, takes some of that control away from the salespeople. So he knew that he was dealing with somebody that they were not going to as easily pull the wool over my eyes. So even in that paid for itself right then and there. That, and the fact that my dog actually at the time had come with us to look at the car and see how he fit into the car, and the dealership had a cat and he got a bloody nose. It was a mess. They wanted us out of there, but they wanted to sell us a car too. So anyway, get a financial calculator, BA2 Plus, and it'll help you on the exams in particular, but it could help you in other phases of your life as well. In terms of the course grade, so I have it broken up here into 4 areas. So these, you can think of these as percentages. It adds up to 100%. Smart Book 2.0, that's the reading. Just doing the reading, 15%. And that is, as long as you do it on time before the deadline, you'll get 100% on that portion of the class. Same thing goes for the homework. The homework is worth 25%. So as long as you do it on time, even if you don't get 100, as long as you've made an attempt at doing the homework, I will round it up to 100%. So there again, you can look at this and say, well, 40% of the class, I'm getting 100 on that 40% of the class. As an economist, I like to create incentives to help you expend some effort on learning this material. So that's the way I do it. I do recommend, though, that you don't try to just get through the homework or get through the reading. It's not going to help you on the exams at all. I have seen students in the past do the homeworks probably using some sort of chatbot or LLM, and they get through it in 5 minutes to work through 15 problems. There's no way anybody working it themselves can do it that quickly. Guess what? They didn't do very well on the exams. So you're really just hurting yourself. I really recommend that you spend some time with this. This is a skill that will serve you through your entire lives. Not just the corporate finance piece of it. Now that will serve you professionally, but most of these topics apply directly to your personal finances too. Now this class is not a personal finance class, but the basic techniques apply directly to the personal finance elements as well. So, spend some time with this and learn the material. The midterm is 25% and the final exam is 35. The reason it's 35% is that it is partially cumulative. And I'll give you more details about that as we go along, but I'll be very specific about which chapters are going to be cumulative on the final exam. In terms of letter grades, this is typical. I'm sure you've seen this in other classes, but this is how the points convert into letter grades. Now, in terms of a little more detail here on the format, like I said earlier, asynchronous doesn't mean no structure. Now, and I'll say this up front, I am willing to work with you. I understand that many of you have work obligations, family obligations. Maybe you're on vacation at a particular time. Maybe you're without internet. Something happens. Let me know. I will work with you. But barring that, I would like to stick to this schedule. I think it will help you be successful in the class and manage your time better. So I have put together a very structured series, and I've set some deadlines for each of the sections of material. And let me just go straight to that so you can get a look at this. All right. So this little calendar shows our 6 weeks of class. All right. So starting, and then actually the material is going to be live to you on the, let's see, I believe that is going to be the 20, well, it's going to be the Saturday, the last Saturday in June. That is what, the 28th? So you'll be able to access all the material on that Saturday, even though class doesn't officially begin until June 30th. That's the Monday. But what you'll be working on over this first week are chapters 1, 2, 3, and 4. Now these, and I'll talk about the actual content of those chapters in just a minute, but I want to talk about the format and the deadlines for this material. So those 4 chapters, I want to have you read those 4 chapters and complete all 4 homeworks on or before that following Sunday. That would be July 6th. So I understand, we've got 4th of July in there, and people are on vacation, going places. But, at least if you know ahead of time, you can get some of this done earlier. But if you don't do those 4 chapters right away, all of a sudden you start getting backed up and you're not going to have time to complete everything else, especially if you also are working full time. So the deadline for those 4 chapters is on July 6th. All right. And then once that's passed, and by the way, I open up the material. So right now you'll only have access to those 4 chapters. I will open up the material for the next 2 chapters, that is chapters 5 and 6. That will open up actually on the 5th of July. So it opens up 2 days prior to where I'm actually suggesting you start. So if you get a little bit ahead, that still allows you to jump into that new material earlier. So on July 5th, chapters 5 and 6 will go live. And again, you'll need to read both of those chapters and work the homework problems on both of those chapters. By the way, homework is anywhere from 15 to 20 questions typically. Many of them are conceptual or definitional, but then there are also some analytical problems that you'll have to solve using a calculator, time value of money, and that sort of thing. And then the due date for chapters 5 and 6 is going to be July 13th. That's again on a Sunday. I tried to line these up on a weekend so that would give you, hopefully if you're working, you've got weekends free or less work obligations. So you can, try to get things wrapped up over that weekend. So those are due on 7/13. Then on actually 7/12, you'll have access to chapters 7 and 8, and that's due on July 19th. Then you've got a 2-day window here, either the Sunday or that next Monday, that would be the 20th and the 21st, to take the midterm. So the midterm, you should set aside like 2 hours. You have up to 120 minutes to do the midterm. I believe there are 40 questions on it. Most people are able to complete that in about an hour to an hour and a half. And again, more details on the final or on the exams as we get closer to that. Then you'll have access to the next 3 chapters. That's 9, 10, and 11. You'll have access to that starting on the 20th. And those are due that following Monday, the July 28th. And then chapters 12 and 13 are due on August 2nd. And then the last week of classes here, down at the bottom, are chapters 14 and 16, due on that Thursday. That would be August 7th. Officially, classes over on August 8th, but grades are not due until, I believe, the following Monday. So I set aside August 8th and 9th as 2 days during which you would find a couple of hours to take the final exam. I've actually given you 165 minutes on the final exam since it is a bit longer than the midterm. So this is the schedule that I would like you all to follow. Now, like I said at the beginning, if you have some obligations, say you're on vacation 1 week or another and you don't have easy connection to the interwebs, something like that, I will work with you, but let me know ahead of time. Don't come to me after the fact and tell me, oh, the reason I missed this deadline was X, Y, or Z. I will be very understanding if you come to me ahead of time, and I will work with you. If you come to me after the fact, there's not a heck of a lot I can do. So make sure you're proactive about that. Let me know right away. If you already know that there's going to be a conflict, let me know. Shoot me an email, and we can figure out how to make this work for you. But this is going to be the schedule. And let me get back to the rest of the syllabus. And so we're down here. Yeah, and you can download this. It's a PDF. So just click over there to the right. In terms of readings, the Smart Book is, I like the Smart Book. It's the thing that it does, what makes it smart, is that it will pepper you with questions as you read through the material. So you get through reading a section, and then it's going to say, okay, here's some questions about that section. It's going to ask you your confidence level in answering a particular question. And then depending upon your answer and your confidence level, it may say, oh, hey, why don't you go back to this paragraph and reread that, because it doesn't appear that you picked up all the nuances in there. So while the questions that they ask, unfortunately, I can't control how many questions they ask. A lot of that is a function of the algorithm they use. So sometimes it will get a little tedious, but if you say, hey, I'm not very confident, maybe it will move through the algorithm quicker. I don't know. I'm not sure exactly how that works, but nevertheless, make sure that you take advantage of that. It's a great tool to help you better learn the material, and couple that with the homework and the office hours that we're going to have, and you should be set. The exams, the midterm is going to cover chapters 1 through 8. It is entirely multiple choice. The final exam is predominantly 9 through 14 and chapter 16, but then we will go back and cover some of the material from the midterm as well. Email protocol, I'll let you read through that. Please do make sure that you put FN 5521 though somewhere in the subject line so that it filters and I'm able to make sure that I don't miss your email. Academic honesty, that goes without saying, but on taking the exams in particular, we're going to be using the Lockdown browser and Respondus, which is a video monitoring system. And, you'll show me your workspace, that sort of thing at the beginning. and then you'll have a camera that will kind of watch eye contact. If it does bug you about looking down, because I do allow you to have a formula sheet on paper and some scratch paper, and you've got your calculator as well, you're going to be looking down a lot. Don't worry about that piece of it, but do make sure that you don't use any other resources when you take the exam. It's solely you, your calculator, the formula sheet, some scratch paper. That is it. So I trust that most of you will have no problem with that. Here are some of the topics that we're going to be covering. So this chapter 1 is very introductory, cursory overview of the field of finance. Then 2, 3, and 4, we get into some of the language of finance and financial statements. The balance sheet, the income statement, the statement of cash flows are really crucial to understanding how finance works. They basically are part of the information flow that we use. Accountants produce those things typically, and we use them to figure out how efficient the company is, how profitable the company is, how risky the company is, things of that nature. So those first couple of chapters, 2 and 3, get into that. They talk about taxes. Remember, pretty much everything is after tax. They also talk about cash flows, and cash flows are a very important concept. You might think, hey, a company has net income of, or has so many dollars per share of net income. Well, that's really an accounting number, and that's a number that can be manipulated. And I don't mean to say that manipulation by accountants is illegal in any sense. It's not pejorative. I don't use that word pejoratively, but it depends upon how the accountants account for various transactions. So as an example, when we figure out what a cost of good is, we take things out of inventory, we use them to produce a good, and then we sell that good. Well, how much did that thing in inventory cost? Well, the price might vary over time, and we might have some items that cost less than other items. And so accountants have to decide, are they going to take first in, first out, meaning that the oldest item in inventory at the whatever cost that is used first. And then we take the next oldest and use that. Now, if costs are going up, that's going to underestimate the cost of a particular product. Or they may use last in, first out. So it might be the last item and the cost of that we use. So depending upon whether a firm uses, and that's called FIFO and LIFO, right? Whether a firm uses FIFO or LIFO, it could cause their earnings to look different. So if we're comparing one company that is otherwise identical to another company, one uses FIFO, the other uses LIFO to account for its cost of goods, we could come up with vastly different numbers. And yet the companies are truly identical. So to avoid that sort of problem, we use this concept called cash flow. So it's a variation on earnings, on accounting earnings. So that's going to be part of that chapter 2. Chapter 3 is we're getting into talking about ratios. So we're going to look at how many dollars of sales do we generate for each dollar of assets that we have. That's a measure of how efficiently we use our asset base. We're going to try to figure out profitability. You know, how many dollars of net income are generated with a dollar's worth of sales? Well, maybe we generate 5 cents of net income for every dollar of sales. That would be a profitability measure of 5%. Or maybe we generate 15 cents for every dollar's worth of sales. That would be 15%, and so on. So we look at, we scale things by various other elements. We not only look at profitability and efficiency, but we also look at leverage, which is how much debt we use to finance the asset base. That's the sort of thing that you'll be looking at and learning about in Chapter 3. Chapter 4 gets into long-term financial planning and how do we project the earnings and the needs of the company out into the future, and how do we grow the company? How do we add new projects to the company? Chapter 5 and 6 are related to what I mentioned earlier, this time value of money. Every dollar that we earn has some sort of future value to it, depending upon how we put that dollar to work. Let me just give you a quick example. Suppose that I were to tell you that I would give you $10,000 either tomorrow or 10 years from today. Which would you rather have? Yeah, I see most of you saying, yeah, today, tomorrow, right? 10 years from now, who knows if he's going to be around? Right. Well, let's assume that you knew for sure I'd be around. Which would you rather have? You still want 10,000 tomorrow, right? Of course you do. Everybody does. That's the time value of money. That's all it really amounts to, is that dollars closer to us are worth more than dollars further away from us. And so anytime we move money around in time, we're dealing with time value of money. And we have a discount rate or a compound rate. There's also frequency of compounding. So you probably heard at the bank, compounded daily or compounded continuously or compounded monthly, things of that nature. That's what we really dive into in chapters 5 and 6. If you can get that down, most of the rest of finance is largely time value of money. A large part of finance is time value of money. In fact, chapter 7 and 8, looking at values of bonds and values of stock, are the application of this time value of money. So what is a stock worth? Well, let's say the stock that you're interested in has a dividend payment that it makes every quarter, say. Well, assuming that this company has an infinite life, we can project the stream of those dividends out to infinity. And suppose that they increase the value of that dividend year after year after year. So there's a growth in that. Now, that dividend 20 years out is clearly worth less than the dividend next quarter, and we're going to factor that in. But basically, we're going to figure out the value of each of those dividends out into the future. We're going to add that up, and that's going to be the value of the stock. It's that simple. It really is. Now, there are a lot of complicated formulas that deal with that, and the math behind that is maybe not as simple, and especially if you've never seen it before. So don't misunderstand me. I'm not saying that this is stuff that you should get like that. None of us do. I didn't. It took me a long time to really own that. But if you spend a little time with it, you can own it, and you will get it. So chapters 5 and 6 are really important. 7 and 8 are the application of 5 and 6. So then July 20th or 21st, you'll be taking the midterm exam, which covers material from those 8 chapters. I have a test bank that I'm using on that, and it randomly draws some quantitative, some conceptual questions for each chapter. And so there'll be 40 questions on that particular exam. After the midterm, we get into what's called capital budgeting. So there we're looking at what sort of new projects do we want to take on, and how do we value those projects? Well, not unlike valuing the company itself or valuing a bond, we use time value of money to do this. Now, there's some other concepts that they bring in here, and in particular, if you'll notice, the title of chapter 9 is Net Present Value, NPV. And you'll hear that over and over again. NPV is the rule that we prefer. It's the best rule to value a project and determine, is it a positive project for the company, or should we pass on it? If the NPV is positive, we take the project. If the NPV is negative, we don't take the project. Simple as that. Now, there are many other rules that people have used in the past and still to this day use. Part of it is that they learned this material 30 or 40 or 50 years ago, and they're just stuck on using some other rule. Those other rules have problems, and as you go through that chapter, you'll see what they are. But that's what the next 3 chapters, making capital investment decisions and project analysis and evaluation, are just variations on this capital budgeting question. The next set of material, chapters 12 and 13, get into what is known as asset pricing. So first, actually, chapter 12 really is more of a history lesson. It shows you what stocks, how stocks have performed over the decades, how bonds have performed over decades, what's inflation been over decades, and that sort of thing. But then we jump into 13 where we try to figure out, well, what's a fair return for something? Should I get a 10% return for taking a particular level of risk? Or should it be 12? Or maybe it's only 8? And what sort of risk do I as an individual wish to take, or I as a corporation, which is really our primary topic here. But like I said, much of this applies to personal finance as well. So we're going to look at what's known as the capital asset pricing model. That's CAPM. You may have heard of CAPM. If you haven't heard of CAPM, you may have heard of beta. And when people talk about beta, they're really talking about the capital asset pricing model, or CAPM. That's one of the most widely used asset pricing models. So it helps us to figure out what is the company worth. It basically looks at risk and return. Higher risk, we should get higher return. Lower risk, we get lower return. If anybody out there tells you that you get really high return and super low risk, they're lying to you. There is no free lunch. You've heard that old adage. Well, economists put it to work. Bernie Madoff is an example, right? You know, Bernie Madoff was paying people 10% year after year after year after year. They thought it was awesome until we found out that Bernie Madoff was basically running a very lucrative for him Ponzi scheme. Not so lucrative for the individuals that invested with him, because they lost literally millions, if not billions of dollars. And so that's what chapters 12 and 13 look at, is this idea behind risk and return. If you want a high return, you have to take a high level of risk. And then the last two chapters here get into cost of capital and what's known as capital structure, or financial leverage. And cost of capital is the idea that when we finance, if we're building a new project, we need to buy some assets, plant, property, and equipment, maybe some automobiles, maybe some some disposable items, things of that nature. How do we pay for that stuff? Well, we can go out and borrow money from somebody. We could borrow it from a bank. We could issue a bond, which is also borrowing money. Or we could issue stocks. So equity is very different than borrowing. And the question is how much equity do we have in a company versus how much borrowing do we have in the company? The combination of those two and the cost of each, we can combine that into cost of capital. You'll hear the word WACC. That's WACC. That's the weighted average cost of capital for a particular firm. That's basically just saying, well, what's the after-tax cost of debt? What is the after-tax cost of equity? And how much of each do we have on a percentage term? Add that together. That's our weighted average cost of capital. Financial leverage and capital structure. That's the idea that more debt we have, the more we potentially have some sort of financial risk, right? We may not be able to make that interest payment next quarter or the quarter after that. As a result, we may go into bankruptcy. So the less debt we have, the less the fewer our interest payments, or the lower, I should say, are our interest payments. Equity doesn't necessarily have to get paid anything. Many companies pay a dividend, but they don't even have to keep paying the dividend. They can just say, we're done. No more dividends. We're out of money. Now, they don't like to do that because that sends a very bad signal to the market. But there are a lot of companies, especially tech companies, especially high growth companies, that don't pay a dividend, because they're burning through a lot of capital as they build the company, as they grow. So that last chapter really looks at the balance between how much debt versus how much equity is financing that asset base, and what's acceptable. And a lot of that depends upon what sort of industry what sort of industry the company is in. Is it in a very capital intensive industry where we have to buy a lot of large plants and land? Well, it's pretty easy to borrow on a large building and some land. That's very common. You know, many of you probably own a house, right? It's easy to get a mortgage. Why? Well, because there's collateral, right? If you don't pay the mortgage payment, the bank comes in and takes the land and the buildings. Same thing goes for a company. So capital intensive companies tend to be able to borrow a lot. Companies that are more service oriented, where they have more employees but very few buildings, they can't borrow quite so much. So you see that this capital structure varies from one industry to another. And then the last 2 days of the class, actually August 8th and 9th, we will have the final exam. And you can choose the time that you take it, but I'd like you to take it on one of those 2 days. So that's pretty much it for the syllabus. A lot of the rest of this is boilerplate. I should mention, make sure that if you're using a computer or a laptop that is not yours, that you get this lockdown browser installed on it. So if you don't have administrative rights to the computer that you're using, make sure that whoever is in IT at your company allows you to put this lockdown browser in. So that's one thing to do in advance. There's some details here. Just click on these links in terms of how to do it. We've got IT support. You can always call them as well if you have some difficulties with that. And so that's pretty much the overview. Let me do one other thing here. Let me show you the module section. So this is where you'll be able to see what you need to do over the next few weeks. And so first module is just chapter 1. Here's a little bit about the learning goals, what this module is about. And then here's the reading. I've got a brief introductory lecture, which you're actually watching already, so don't bother with that one. And then there's a problem set down below. I actually also, I'll try not to do too many of these because with a 6-week session, I don't want to overburden you with articles. But here's a quick little article out of Barron's, very topical that I thought might be of interest. The stock market outlook just got hazier, even the Fed is tiptoeing. So, and we do have a free subscription not only to Barron's, but we also have a free subscription to the Wall Street Journal. And I've got links on the Canvas course that allow you to sign up for those things. So you don't have to pay for this. You should be able to get access to this. I just haven't signed in with this particular device that I'm using here. But look for that in the, I'll put it in this first module, the links to that. I haven't done that in this particular one, but they'll be down here under the assignments. I'll have the links to how to sign up for those free subscriptions. I strongly recommend that you read at least the Wall Street Journal, or at least use, graze the headlines out of the Wall Street Journal on at least a weekly basis, if not daily. Otherwise, I believe that's it. I am going to have some office hours set up for you all. In fact, before I sign off, one more thing, sorry. So we're in student view now, and I'm going to go over here to the calendar. And I have set up some required office hour times. And these can be as short as you want or as long as you'd like or need. But if you look here in July, let me go to July. You'll notice that here are the due dates for the chapters, the reading and the homework. But if you go over here to the right and click on this Find Appointment button, and you'll notice that first select the course, and we'll select FN 5521. You'll notice that there are some office hours that pop up right. Oops, let me get this thing out of the way. They pop up here on the 7th and 8th of July. So I've set up times from 4 to 6:30 and from 2 to 4:30 on the 8th that are possible office hours. Now, I'd like to do them during those 2 days, but if those 2 days don't work for you, or if you're working until late or something and you can't make any of those times, just send me an email and we can find another mutually agreeable time. Like I said, my time is fairly unstructured over the summer, so I'm happy to work with you. It could be later in the evening if that's helpful. It could even be on the weekend. But I've set these up for each of the modules. So the first 4 chapters, this is the preferred time for the required office hours. This first one, obviously, I'd just like to be able to get to meet you all and get to know a bit about each of you. And then if you have any questions about the material, that's when we can start talking about it. Now, if 20 minutes isn't long enough, I'm happy to set up another time, or maybe somebody didn't sign up for the next 20-minute session. We could run longer. Either way, I want to make sure that I've answered all of your questions to your satisfaction. The other thing that I'd like to bring in here, I know that many of you may already know each other, and if you're working together as you go through the class and you want to do office hours together, you can sign up. Multiple people can sign up for the same time slot. So feel free to do that as well. But now that really is it. I'm going to leave the student view here, I think. There we go. Back to that. And I hope that you all have a great time with the class. Looking forward to meeting each of you. And let's enjoy our time together learning about finance. Thanks very much. Talk to you soon. Bye-bye.